Hey guys, DJ from PTA. Going over January 19th trade. This is actually one of the trades I placed this month. Again, guys, with me not really having a lot of time teaching new traders, helping out with the website and other features that we're doing, uh, it's just been kind of difficult to really put in the information and the time to do the videos on time or that day or whatever the case may be. So I'm kind of like doing this on the weekend when I have actual time. So GNS, CUEN were the ones that did pretty good. They were penny stocks. GNS is the one that I actually placed the trade on. CUEN I didn't, just didn't have the time because I had to go and actually run some errands and different things like that. So as always, guys, I always place stop losses in my stocks to kind of keep things afloat so that I don't miss the meat of the trade. But most cases, I take a little bit off or something off to capitalize on a win, leave the rest at break even, and then I let the trade ride. So that's the biggest thing you want to learn from trading is let your winners run and cut your losses quickly. So with these two particular trades, this is what the sentiment been over the last couple of months from when I did my reviews back in November and December, is that most of the stocks have been penny stocks, stocks under a dollar that's been running. This lets me know when they're trying to build some liquidity in the market. Is, you know, most people can get involved in penny stocks, different things like that, load up, make money, and kind of take it from there. So I know if you've following us in the Discord and you're part of the Discord, you will see a track or a breakdown of some of these trades. Because one of our traders, King Trade King, shout out to Trade King, he is always placing his pinpoints and areas of interest when he's placing trades. He has great commentary on there. If you're a person that want to follow along and legitimately see what someone is doing, you got comments or whatever the case may be. He's pretty good at circling back. One of the key things of all this is actually identifying the trade, looking at the pieces that is involved with that trade, and then waiting for the setup. I think the hardest part from when I'm reading and listening to people is that they can't wait for the setup. They can't be patient with the particular trade. They want to get in the trade now. FOMO sets in and those type of things. So one of the things you definitely don't want to do is put yourself in a position where you either get in too early or you exit it out because you hit your stop loss, or you're missing the trade and now you're playing FOMO again because you're playing catch up. Now you're chasing, and that's probably worse than being stopped out. It has a higher risk, and then it's just not good trading. It's just not good trading fundamentally. So the first trade that I'm going to go over is CUEN. Now CUEN, I don't think that was placed in the Twitter, but I know GNS was. So make sure you follow us on the Twitter account so you don't miss any of the videos as well, because I do post those on there. But one of the biggest things about CUEN is that with it being a penny stock, it was a quick pop, and it was kind of interesting how the trade ended up playing out once I went back and reviewed it and looked at the level two. I didn't really see, and it's probably why it didn't pop up on my radar, why this stock could really move. So we'll draw areas. So, you know, we got a lot of congestion up here, as you can see. Something's going on right here where there's some massive pullback here and a nice little pullback there. Same with here. I see support broke down, came back, retest. So let me actually move this up. Let's see something here, move it up to there. Now when it comes to these penny stocks, I don't really try to round off because 45, 46 are like whole numbers. They're not as big as a 50 cent, but I've seen some major pullbacks at certain key areas. So just be mindful of that when you're trading those penny stocks. I don't want to be too tight with it, but I do try to, you know, get an idea of what the areas is. So like right here is a very critical area, and this is probably one of the most right there. And I say that because you have so many reflection points in this area. You got a rejection here, a pullback, a breakout, and then a rejection several times here. So that's 60, 61. I'm gonna just call it probably 60. Is probably the most key area of the particular trade. And I find that interesting because it actually pulled back and closed up under 60. So that was a very important or important price point. I mean, it closed right at 59. So that 60, 59, 61 cent area was probably massive and important. So let's go down here to the 30 minute. Again, this is CUEN. I'm looking at this stock. It didn't really have any pre-market volume. So when I see a stock only have like 10,000 pre-market volume, it didn't even reach the 1 million it did the day before. Yeah, the pattern's there, but I gotta wait for the volume to creep in. So I'm probably gonna let it stretch itself out with some volume first, and then wait for the pullback. When it's stretched out, hit this and come back, I'm still looking for a potential pullback from a higher time frame. We got it off the 30 minute. As you see here, it was a pullback. So if you go back down to the 15, it probably looks a little bit more clear with the pullback and then some type of step into the stock. Now, once you get this type of move, the biggest thing you want to do is kind of be patient and wait for the volume to really creep in. I saw the volume creeping in here. As if I was to play this trade in real time, I would have probably stepped in somewhere around the 60 cent area. The reason for that is just because this was a key area off the pre-market. I'm sorry, the previous weeks. This was a key area that it actually broke down from. So I know there were shorts involved. Remember, this is a 5 minute, so this is a big area of pullback. It closed right at 60 cent on that 5 minute, and then it opened up right at 60 cent. Got a high of 60 cent and pulled back. When I see those type of things happening in a key area, this lets me know that this is probably an area of interest for a lot of traders. This right here was a key area. So again, confluence, we got 60 cent being on the marker based off the daily. So let's take a back at the daily so you can kind of formulate it. We got this area as an interest that, you know, you have massive amount of pull or some type of positioning being held in this area. They broke it, they came back, retested, came back up, retested, and pulled away. So that 60 cent historically on this chart is important. So if you go all the way back, and I mean, we're talking about May, June of last year, you can see that this was a key area of interest. When it broke here, it actually ramped up. So there's a lot of people that was sitting in this stock, and what it did that day, it had a range of 60 cent. I mean, it opened up at 54, ramped all the way up to 112, and then pulled back. So you have massive amount of shorts sitting here. You got a lot of buyers and people that stepped in here, and you know, depending on how long they've been holding the stock or where they're trying to direct the stock, you're gonna get some type of squeeze from key areas if it holds. So as a result, this one in particular held. So if I go down to back to the 5 minute, you can see that this key area, which match up from the higher time frames, is something of interest. It came back, it retested this area again and pulled up. So when I see these type of things happening in the stock in these key areas, I want to see some type of retest, hold, something along that line. So probably the first filler would have been somewhere here. Maybe once it closed above it, I would have been looking for entry. So in that 5 minutes, it closed at 60, and then the high was 60, it closed at 60, and then it opened up higher. So that was probably a first signal, a first area of interest when it comes to buying. So people would say, well, why would you buy there? Well, we just had a stock that historically for quite a while could not close above 60 cent, and it just did. So when it closed, you have your people who are retesters. So you got a little bit of confluence here with the multiple things we discussed earlier. We got the volume headed there now. Key area being 60 cent. It could not close above it. But now we got something that actually closed above it. So a lot of traders stepped in right here is what my ideal thought would be in this particular trade. That's probably where I would have stepped in at, is right here at 63. Maybe 63 risking to 60, or 60 cent, or 59. So you would have looked at about a let's just call it 5 cent risk. 5 cent would have been, somewhere closer to here, 58, which is behind a previous area where it pushed from. So you got this push, pull, push. If I can risk behind a pull back right here, this is a key area to get in. So I probably would have got in at 63. Again, that's a 5 cent risk. Remember, we're looking at 3 to 1, 4 to 1. So you're looking at, a 5 cent risk, 15 cent gain. 15 cent above 63 will be about 78. So 78 probably would have been your exit, somewhere around here. So I'm gonna mark that green for profit taking. So right there would have been, and you can see as it jumped, and then as soon as it hit that price and go through it, just slammed itself straight through. So a lot of people probably released or took some stuff off. 3 to 1. 4 to 1 would have been 20 cent. So 20 cent would have been about 83. So 83 would have been about right here. So a few cent higher, depending on your share size, that would have been a phenomenal trade right there, 83 cent. So for those who pushed it to the 87 or just play off a risk, that would have been a nice move to 87. So 87 from 63, that would have been about 24. You would have easily got a 4.8 to 1, almost 5, depending on if you held some of it to go higher. You would have looked at a 5 to 1 trade on a penny stock. That's phenomenal. I mean, that's just ridiculously good. I mean, that's where you got those people who, can take as little as $10,000 and double, if not, triple their money in these smaller stocks. And that's what the interest is when it comes to these penny stocks. You can take very little and make it do a lot for you because of the actual price change. So that's something to look at when you're looking at your pinpoints or areas of interest to actually get in and get out of the stock. Those are the things you want to pay attention to say, okay, this is a key area. Let me get out, and know where you're getting in and out. I can't stress that enough. That's something that I tell old traders and new. If you got an entry, you need to know where your stop loss is. You need to know that absolute stop, as well as you need to know where you need to take profit. It's not just as such to take profit when it's going up. You have to respect your risk to reward. So if you're risking something, at minimum you got to do is 1 to 1. That's at minimum, but that's if you're just trying to break even. Realistically, you want to be 3 to 1 or 4 to 1, because then let's think about this. If you have a 4 to 1 trade, that means you would have to be wrong 4 consecutive trades to wipe out that one loss. If you're trading effectively, you typically, and it's just running numbers, you should be above 75% win rate. So that means if you have 10 trades, at least 7 of them should be 4 to 1, 3 to 1. And then you're gonna lose sometimes. So those other 3 trades is your ones you took the 1 to 1. So if I'm getting 3 to 1 on 7 trades and I lose 3 trades, I'm going to always be profitable. And that's what good money management would do. You set it and forget it. You gotta know where your support and resistance. Let it hit the line, get out. Now if it goes higher, so be it. That was great, but that wasn't part of the plan. You're not just riding it to see how high it can go and get the peak. No one's getting the peaks, no one's getting the lows. That just doesn't exist. So when I hear traders getting out right at the peak or something like that, I'm happy for them, but that's not realistic. It's not something you can consistently do or quantify in a trade. So the biggest aspect is making sure where your support and resistance, your order entry in and out before placing the trade. And that's how this one ended up playing out. And as you can see, it came back, returned, and closed below that 60 cent that we talked about before. So nice little great pop move. It had some volume, got up to about 32 million. But again, once it had reached over that million from the day before, again, it's trading higher than the previous day close. When all those factors came in, it just made it, point out to be a really good trade. Now the second trade, which the one I actually made money on, was GNS. GNS was one of those trades, again, you had to be there to see it. I actually got a really good order fill on this, and I felt it was just a really good trade altogether. Probably one of my best. For me to be not on the desk for as long as I have not been, it was just a really good trade. So this chart really didn't give you a lot because it hadn't really been trading. Pretty much was a good news play, I believe. But overall, I looked at this one because of the amount of volume it had for the day. The volume pre-market was at 10.6 million. I mean, if you're trading something and let's just say the previous week was at 5.3 million and you're already at double that in pre-market, yeah, that's going to probably get more of my attention than anything else. It even was more than the previous day. So we're seeing increase in volume from day to day, whether it was red or green for the day. I'm seeing the volume in there for some reason. There's a reason why this stock is moving. I don't get into the semantics of it. I really look at what the volume is doing, because I know if everybody's looking at it, there's a reason. Whether it's we're going higher, we're going lower, we want to do this, we want to do that, doesn't really matter. I'm just watching the price action so that I can pinpoint a significantly good area for me to place a trade. I placed at 170 because we had a big rejection and then a pullback right around the area. And oddly enough, it's a nice round number. As you can see here, this looked like this was pretty much the top of the stock at 230 in its range. So, I kind of keep those areas as ideal areas to think about. So I didn't have a lot of support and resistance to draw off the daily. So I knew that most of it is going to come from pre-market volume and kind of paying attention to what they were doing in pre-market. Now think about this. You have over 10 million in volume, almost 11 million in volume in pre-market. That's more than yesterday's volume. That's more than the previous week volume. And even if you want to take it from there, it's more than previous week and yesterday's volume combined. So we're right there at a point where I'm producing more volume. I got more eyeballs, people involved than I had in the last week in a day. So that's something that I personally look at and say, hey, this is interesting. This is worth looking at. And that's probably why my eyes were completely glued to this particular stock. Now, let me give you a breakdown of this on GNS based on how this actually played out. So we go down to the 30-minute. Really no volume. It creep. It breaks open. With this amount of volume, I'm looking for any pullback. So when I got the pullback on the 30-minute, and this is the hour, when I got the pullback on the 30-minute, this was significant enough for me to take a look at this and say, hey, this may be the entry. So we got this pullback off of the 30-minute, which was these two here, right? So we got this pullback, and then we start getting this reversal. So I'm looking at this as a key area. Why? Well, again, confluence. We looking at it's trading above previous day high, previous week high. It's trading above previous day closing price, and it's trading above previous day low. So it's trading higher than the previous day candle, period. With, massive amount of volume coming in. Massive. When you talk about 10, 11 million in pre-market, and the stock has been pretty stale for the last, couple of weeks or so, that lets you know. Today's volume on that stock was at 237 million. So this wasn't something that just, whatever. No, a lot of people were taking a look at this stock. A lot of shares were traded. So ultimately, my key area was right here. I end up getting filled. Let me break this down to the 5 minute. I believe I got filled at, let's see something here, about 86, 88 cent. And I got a few shares right at the 90. Because I was looking at that pre-market high. That pre-market high was 92. I liked the way the chart was looking at that time. So I said, okay, I'll get majority of my shares around 90 cent. I think I had about a 90 cent average. And I was willing to risk a little bit on it. And the reason for that is because of the amount of volume it had. Let me break this down to a 1 minute to kind of give you a synopsis. So right here is where it got interesting. When it pulled back, I started adding very slow into the trade around 86. I was willing to risk to about 79. So that's literally like 7 cents. We'll call it 10 cents, or give or take. But it was about a 5-7 cent risk. I was looking in that area just because the range was only 42 cents. So I'm thinking, okay, if I can get, a 5 cent risk, a 3-to-1, 7 cent risk, a 3-to-1 will be 21 cents. That's about half the range for the day. So if I'm thinking, okay, I could get it around, 21 cents or something like that, I can probably get in and out this trade pretty good, and not have too much worry. So I loaded in around, 88 cents, 90 cents, somewhere around there. Started loading in shares. We got this nice little pullback, and I wasn't really too scared because, again, I had my risk right back here. So I was going to let it play out. I had a lot of confluence. I'm looking at it's trading above previous day high. It's trading with massive amount of volume. It's trading more volume than the week before. It's trading more volume than the previous day combined. At this point, it's going. I'm just sitting here waiting to see how it's going to play out. I have my risk set, everything. So it popped up, pulled up into the 98 cent, $1. Now at that point in time, I hadn't made my area. So this is where you have to have that discipline, because some traders would take off. Hey, I'm up 10 cent, 20 cent, 10 cents on this. I'm going to take profit. Now, because I've been trading for a while and I believe in the strategy and I believe in what we're doing, I have to play it out. And that's the one thing about automating it all. Because I got in here and I had my risk here, I was not going to get stopped out. So this could have traded, and it could have very well traded and went back and then eventually got me out later in the day. And I would have just took a loss, and that was okay because I had already assumed the risk. But with the amount of volume it had, everybody looking at it, I'm thinking they're just trapping to get a squeeze. And sure enough, that's what ended up happening. So we end up getting this ripped higher to 105. Now, at this point in time, granted, I got in at 80 cent, 90 cent. You know what I'm saying? It's ripping to 105. So I'm looking at this. I took off a quarter because at this point I'm full size. So I took off a small quarter just to pay myself. I'm feeling comfortable. I'm still averaging about 92 cents as my average at this point. And then it started to do this sideways price action, but holding right here. So I kind of look at it like this. This is an entry day hold. So not only did we just break out of a key area here, I retested and claimed it. Remember, we're going to paint entry days purple. I retested and claimed it. It went back and then it retested 1, 2, 3, and then it got higher. So this is where you're paying attention to price action. So let me kind of paint this picture out in such a way that you understand. And this is where been trading for a while, looking at price action and different things like that helps. Now let's think about this. This is even from a smaller time frame such as the 1 minute. I just retested here. I just retested here. I just retested here, but I stepped it up. Now that step up wasn't a lot. You figure that's 98 cents. This step up is $1.01 or $1. right? It's literally a dollar. So 2 cents. That 2 cent step up is a indication to traders that I want to go higher, because you said I test, and I can't get any lower than the previous test of 98 cents. And this is from reading the chart. You're now able to see this and say, okay, this is where we're headed. I'm headed higher. Right there, I'm seeing it. I'm seeing the wedge. It's building momentum. I'm going higher. So ultimately, when you're going higher in the stock, let's see something here. When you want to go higher in the stock, what do? You start to step it up. It starts to step up here. Boom, 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 boom. Squeeze. Everybody saw it right here at this 105. Now, again, confluence. We got trading above previous day high, massive amount of volume. We got an intraday support in around 98, up underneath a higher time frame resistance. You're bound to get some type of squeeze in this area. So we seen the rip. So this is pretty much how they trap everybody. So you got shorts. You got longs, 3 and 3. I tried to get you again. So this is where it starts to tip over. So you got to look at it like this. It's 1, 2, 3, and then the tip over. So you get this roundabout trade, right? But what you see at the bottom is you got tip, support, and then you got this right after this, you got the support step in right here. So if you take a look at that closely, you can see what was going on. Draw it just a little bit neater for you. Right here, right here, right here. They try to tip it, and then the buyer said, nah, we want to go the other way. Right there. So just a little bit higher. I'm trying to make it look perfect for you guys. I'm a perfectionist, I guess. As you see here, it stepped up. So you had this support, and then they stepped up. So this is 1, 2. And if you go into, and if you are a member of PTA, we discuss this extensively in different videos that are only exclusive to the members on the website. So if you go on the website, you go on there, these are the things that we teach about the visual that you can look at when it comes to these trades. So this step up here is what caused the push. So this is where it pushed up higher, and then you always get a retest, and then there's always those people. These are the like people who get in early, and then here go your FOMO people, and then you got people all nervous and scared, and then it hits another key area, and then it just keeps hitting these key areas that's very important to get higher and higher. So when I see this type of movement, that's when you're like, okay, great. Now, what was interesting about this is that it began to set up another area of support. And that was, let me see something here. This area of support started to step in right here around this 150 area. So we'll just call it 150. So 150 purple. So we got us another intraday area. Again, broke out, came back, and retested the same area it was at before. And then it did it again. 1, 2, broke it over to get some more shorts involved, to build some volume. 3, stepped up. So they did the same move again, but they tricked the shorts into getting involved, which I thought was very clever when you sit back and look at the price action. So you got support, resistance, support, then the step up. So the same combination that they used over here, they did it again right here, but they added this little buffer here to suck in more shorts. Okay, so we have some resistance here, which is giving you this slant, but then they stepped it up right here off of support. Remember, you got intraday support, you have major support off the daily, the turquoise line, and then they came back and did it again. So then what they did is they ripped it up higher, bounced it, and then started ramping it up even harder. So when it got over the 230s, that's when this thing just flew. And then they broke it out, and then they returned it, and then kept it going up to 3. I, fortunate enough, ended up getting shares off into the 220 area before close. I don't really like holding positions overnight. And then there was a change in behavior in the stock. So at that point in time, I ended up taking shares off simply because it started to break down off of the 15 in a way that I didn't like. So at that point in time, once I got there, I say I got some shares off at about 220, 215. Those were the last couple of areas of stock of shares that I took off. Because at that point in time, I had returned back to the desk. I seen this ramp. I seen it wasn't sustainable, and I said, hey, this thing starts to break down below 2 again. I'm gonna start, loading out. So I got some shares off at 215, 220 area, which played out to be well. Now, again, hindsight, you're looking back saying, wow, I could have got out at 3, but you can't catch them all. I got a phenomenal move. For me to have a 92-cent entry and then be able to get stuff off at 220 average on that was $1.28. So $1.28, and I literally had a 7-cent risk. That was like an 18-to-1, 18.2-to-1 trade. Phenomenal trade. I didn't put up a lot of shares because I was doing some things, but this could have literally been a 50, 70, maybe $100,000 day instead of what it ended up being. So this is what I mean about, finding those opportunities and then allowing the trade to manifest and play out the way it needs to. And shout out to Trade King because he called all his trades. I believe he got in a lot sooner than I did, but he did some great commentary on this one as well. So, guys, when you get a chance, jump into that Discord so that you can actually start to pay attention to these trades and see ultimately how this works. Once you start to understand those things, you're able to place those trades, you get a little bit more confident, then you can add size. So the biggest thing is understanding the strategy, understanding the key areas and points, support and resistance, understanding the confluence and why this is important, placing the trade, understanding your risk to reward, and respecting it. When you get outside of that range, cool, go ahead and leave, a quarter position on, or go ahead and leave 2/4 of position on, leave half your position on or something when you're comfortable. But you first have to allow the trade to manifest and get some of those to get some of that profit. Once you hit profit or hit a zone, then you can very well let the rest fade out. I did a pretty good job on the fade out simply because I wasn't sitting here all day looking at the trade. I placed my stop losses, I assumed my risk. I said, hey, I'm gonna come back to this in the afternoon and see where we're at. Well, when the afternoon came, I'm looking at this around, 2 o'clock. I'm starting to see it ramp at 170. I'm comfortable. I'm like, hey, I got in at, 90 cent. I'm in no big hurry. So I moved my stop loss up to 150 just to have that set. But I don't normally hold trades overnight. I'm not a big after hours trader either. So when I was looking at this and I seen the price moving and everything, it's kind of like, well, I can't be that greedy. I can't be that ruthless. So let's take some stuff off. And that's why I took off in the 220s going into the close. So I hope this makes sense as far as the support and resistance and the confluence when it comes to these trades. But moreover, paying attention to the price action. Yeah, you can have 5,000 indicators. Yeah, you can do this, you can do that. You can do all these different things. When it comes to it all, you got to really pay attention to the price action and understand why these things are happening. Because more likely, if you start to pay attention to your trades, they all have similar patterns. They all have similar behavior, just at different price points. And those similar patterns and behaviors is what, pro traders take a look at. They identify and they place aggressive trades. And as you get more and more comfortable, get more understanding of trading, it makes it a lot easier for you to add size. and focus on that size when you're comfortable with your trades. All right, gang, if you have any questions, concerns, make sure you leave it in the comment section. Make sure you hit that like button, hit that subscribe button, and don't forget to click that notification bell so you don't miss any of our videos. And I tell old traders and new, stay studying and stay focused.